What should I do at the tax level if I transfer all or part of my company money to my personal account and use that account for personal and company payments?
Okay. Um, there is this belief that because you are the only owner in the company, you do not need payment. And that is completely incorrect for a simple reason. Whenever there is a company, either S corporation, regular corporation, LLC, limited liability company, the IRS will always expect that you report payroll. There is a line in the company report. This is for LLCs with 2 members. This is for corporations with 1 member. This is for S corporations with 1 member. The IRS will always expect that you report payroll. There is a line on the tax return that it's used to report salary from the owners, salary from shareholders. And if that box is empty, the IRS is going to audit you. That's why it's extremely important that you do get payroll, that you get the payroll for the company and you pay yourself. That will be, say, the first line of defense for an audit. The first line of defense. This is to avoid any auditing from the IRS. This is not something that it is believed. It is happening already, especially when S corporations. S corporations, I've known that clients who have come to us and say, I got an audit from the IRS because I didn't pay myself a salary and I am the only owner of the company and this is for an S corporation. So if you own an S corporation and you are a single member, if you own a C corporation and you are a single member, make sure that you get payroll. You pay yourself at least once a month. You cannot pay once a month, paying yourself once a quarter, but pay something, otherwise the IRS is going to come after you if that box, the one that says on report, on the report of the company, the line that says expenses, shareholder, payable to shareholder or salary to shareholder is empty. That box or that line should always be with numbers, meaning that you have to pay yourself. That will be the first line of defense for the IRS. Now, for the LLCs, whenever the LLCs, but they have one single member, if you have a business, either you are incorporated or you are not incorporated, either you are in an LLC with 1 member or you work by yourself, there is a principle that if you work and you make money, you have to pay taxes. That's why every employee who works in a dependent relationship, in a subordinate relationship with a company in the US will always have a payroll, and that payroll will mean deduction and withholding of income tax, Social Security, and Medicare, those 3 withholdings. And then with those 3 withholdings, it means that you are paying in advance your taxes because those taxes are deducted. As those taxes are deducted and you pay in advance, the IRS is expecting that the same as the employees, the people who work with companies, they pay in advance. Self-employed people also pay in advance, but usually that never happens. So if you are self-employed and you don't have payroll, you are supposed to pay taxes quarterly. Probably that becomes difficult because you have to calculate the taxes that you have to pay. Second, you have to send the check to the IRS or pay online. So it's not automatic. And when things are not automatic, they are problems because you have to think and then you have to execute. The thinking is painful because we are so busy. Thinking is painful and it's costly. So instead of having this pain of not setting on a payroll and then paying by yourself in a quarterly basis, because you are self-employed, either you work by yourself or you have an LLC with one single member, LLC with one single member, they are disregarded entities, and it is the owner that has to report like a self-employed. So if you're self-employed or own the LLC with one single member, you are the only member, the only owner of the LLC, you have to pay taxes quarterly. How? Estimating the taxes from the previous year. So whatever you pay the previous year, you divide into 4, and then you send checks quarterly to the IRS. If you don't want to have that pain, get payroll. Go to any company, we can also help you, but there are many companies that specialize in payroll, and they are very affordable. And then once you set up, you only need to have the money in the bank. So that way you automate your life. Life can be automated in the US and in developing countries. Life can be automated. You can automate all the payments for all possible utilities and all possible payments, even the mortgage, anything. But the same thing as you automate the payroll for you automate the payment for your personal expenses, do the same with your payroll, automate it. And that automation will take that problem out of your back, because it will be automatic. You only need to have the payroll. And then taxes will be paid automatically once a month. And at the end of the year, you will get a W-2, you will report your taxes, and you will avoid penalties, because when you don't pay quarterly taxes, the IRS assess a penalty for not payment. So
Okay.
the second line of defense is avoiding penalties with the IRS by setting up automatic payroll, especially if you are a self-employed individual or you own an LLC with one and you are the only owner. That will be the second line of defense.
Mhm.
That's
Got
why
it.
you need payroll.
Awesome. Okay.
Now, if you use the money from the company to transfer to your personal account, say the company, transfer all of my company money to my personal account and another account for personal and company payments, that is incorrect. Because you cannot commingle the funds of the company with the funds personal.
Personal.
So you never transfer money from the company to you unless it is a distribution or it is a reimbursement or it's anything that you could justify to the IRS. Because when you do that, you are exposing yourself to that. If you are audited, you are going to, the IRS is going to claim that all that money that you transfer to your personal account is income. And
Mhm.
all that income is going to be taxable.
Right.
That will be the third line of defense with the IRS. Do not transfer money from your company account to your personal account, because all that money is going to be considered income if the IRS comes to audit you. If you want to transfer money from the company to the personal account, yours, get a payroll. That's the easy way. And then you do not expose to any of these 3 problems that the IRS is going to come after you.